Good afternoon to everyone. My name is Jesus Avellan, CEO of Aaron Group. Welcome to this month's Aaron webinar titled the Hotels Operator Iberian Challenge. We are happy to have had a lot of interest in this topic, and we thank all of you for taking the time to attend. We wanted to put forward this topic because we are witnessing a very interesting moment right now in the hotel industry in Spain and Portugal. Even for a sector as dynamic as this one, there has been major movement over the past months. The pandemic has been a watershed moment for the whole industry, obviously presenting very serious challenges. But it has also opened new opportunities, particularly for international brands. The Iberian Peninsula has often seemed to operate under a different set of rules vis-a-vis hotel investment projects and contracts. What we hope to do today is offer some insight into the traditional ways of working in these two countries, as well as discuss what is happening right now and where the industry is likely headed in a post-COVID context. We are honored to welcome Wilke Cito as our moderator today. He has a wide international hotel experience, heading the development departments of some of the world's top brands, including Four Seasons, Starwood, Westin, and the leading hotels of the world. Currently, he is the managing director of Iberan and a strategic partner with T2 Strategy. Please, Wilke, now is your turn.
Thank you, Jesus. Good afternoon, everybody, and welcome to the ARM Group's webinar on the operator challenges in the Iberian Peninsula. Today, we welcome Jérôme Lassera, Accor's Vice President of Development for Southern Europe. He's worked in management positions for Accor development teams in the Mediterranean since 1998. And he's joined by Nuno Galvão Pinto, the Hyatt Hotels Corporation Regional Vice President for Acquisitions and Development. He's responsible for the expansion of all Hyatt brands across Western and Southern Europe and North Africa. And we have Edgar Uye, Marriott International's Director of Development for Spain and Portugal. He has a breadth of experience spanning Europe, the Middle East, and Africa in finance and development roles. And I am very pleased to welcome you, and I wanted to set the context for today's discussion. We will spend about 45 minutes having a discussion along 4 subjects that we had noted for all the participants. And then we will close with about 10-15 minutes time for questions. So first, we'll talk a little bit about Spain and Portugal as a playing field for hotel development. Secondly, cover kind of what's been top of mind for all of us, COVID and development efforts. And finishing off the second half, we'll talk about growth opportunities, as well as owner profiles and deal structures before we close for questions. So before talking about the Iberian Peninsula, what is it about this market that has been so challenging for international operators? I'll just tell you a couple of stories from my own personal experience to give you a flavor of the challenge. In September of 2020, last year, the Four Seasons Madrid opened. And that's over 30 years after a first initial contact from Four Seasons. The deal actually started working very heavily in 2008, where Four Seasons had to create their own opportunities, typically manage growth by management contracts, but really they had to behave in kind of a development role, a developer role, to find a site, find partners, and put things together. So that's one piece. That's dealing with the external environment in Spain. The second piece is more internal to many of the brand companies, of which a large number are from North America. And I will quote a CFO when presented with the challenge of growing in Spain in particular. And he says, or said, "I hate leases, two pieces, right? So there's the American asset-light company growing around the world on management contracts and other structures. And there is a wall or a gap between expectations for Spanish owners, talking specifically about Spain. So I was wondering, Edgar, I mean, is it really that hard to enter Spain? What are the challenges that international groups are facing?
Well, I think it's not a matter of that the market is. I mean, it is difficult because it has been driven by a lot of local operators, right? And we as an international hotel operator, we are more focused, as you are saying, as an asset light. Our business model is based on franchising and managing hotels. So the Spanish market, or even I would say the Portuguese market, are both very lease-oriented market. And it has been lots of years that we have been trying to go into that change of mentality, explaining what's a franchise, what's the benefits, etc. Same for managing properties. Yeah. So yeah, it's been difficult, but I think every year and every year that it passes, it's getting better and better. Yeah.
Nuno, how about you? What are the challenges that you've been seeing? I mean, you just recently signed a deal.
Yes.
And is this the kind of the new wave, or is it still playing in the old rules?
I think it's a sign of things to come. To Edgar's point, I think what was lacking in Spain and Portugal historically, and a lot of countries in Europe, this is not unique to Iberia, is an absence of people willing to assume lease positions without it necessarily being either a Hispanic brand who are used to taking leases. People like third-party white label operators have entered into Spain and Portugal and are now taking this position where they take a lease, have an appetite to take leases, and are used to dealing with international operators under a franchise agreement. And so a lot of the deals that we are now looking at, part of the deals that we are now looking at in Spain and Portugal is with this type of structure in place. Whether it's a third-party operator who takes a lease, or whether it's an investor who sees this as an investment opportunity, takes a lease position and gives us then a management contract. That is a structure that we've assumed in the Andes in Lisbon, for instance.
Interesting. So independent operators are basically taking up the type of arrangement that management companies are either not structured to do so or not so interested in.
Correct, and same for us. I think I would support the idea of that Nuno's saying, right? I think that's the case in our future growth as well. Yeah.
Jerome, how about Accor? Accor is from European roots. You know well the lease structure. Did we lose?
Yeah, when I started my career in Accor, I was in development. You lost me?
Yeah, we lost you in the beginning, so start over.
Okay. No, I was just saying that when I started in Europe, in Spain, we were asset heavy. So I started my career doing development through lease agreements. Then after, Accor had to move to an asset light strategy, because we have to be comparable to our peers. That's the issue. It's not so much the fact that the lease, it's a risk or whatever, but you don't have the same structure of the balance sheet and your income statement if you do asset light or if you are asset heavy. So that's why 4 years ago, more or less, we gave up all our assets. We put them in a new company where we kept 30% of the capital. And we are going like our colleagues on the asset light model. We work with third-party operators in order to be able to cope with some also legal issues. For example, in Spain, a lot of the investors active in the hotel business, they go through SOCIMI. So it's a vehicle, it's a REIT, where you cannot legally take over the going concern of the agreement, because it's got the upside, but they cannot do it by status. So in this case, again, you have to build a deal, finding the people that will take over the lease.
So does that mean in general, in terms of the trend going forward, that for this particular market, one of the current solutions appears to be an operator in the middle? Does that mean that most of your growth is going to come via franchise?
I think the majority of our growth is kind of franchise. If I may jump in, sorry.
Yes, please.
And that's something that we're seeing across Europe. That's not unique. But I think another variable, it's not just the TPOs that want to take a lease position. I think it's the type of investor that we're today seeing in Spain and Portugal that is also changing. An investor that's much more global and that's used to dealing with hotel groups and that is very happy to either take a management contract or that has his own operational capabilities and then does a franchise directly with the operator, with the group, with the hotel group. And that is very different to 10, 15 years ago, where it was very much a localized investment and developers pool.
Well, by the way, we did have a question. The new project you just signed is in Ibiza, the Seven Pines, under the Destination by Hyatt brand, correct?
Correct.
To add something to Nuno was saying, right? I mean, in our case, for example, it's true the franchising is growing really, really fast in premium brands and select brands. But I would like to add that in luxury, we do not franchise, right? So this kind of transactions with white label operators would not work, would only work on premium and select brands. So I think it's important to mention that, yeah.
So interesting, because one of the kind of approaches prior to Marriott's acquisition of Starwood was some franchising of the luxury collection. And is that approach changed then?
Well, it's not really that change. There are some exceptions between luxury collection and JW Marriott that we could explore, but it's a case by case, depending who would be the operator as well. But the rest of brands, we would never franchise. Yeah.
How about Accor, Jerome? In terms of the types of brands?
So for us, our luxury brand, we do not franchise our luxury and ultra-luxury brand. We go on each management agreements. You may have some exception, as Edgar said, but normally we don't have exceptions so far in my region. So we franchise everything, which is from economy to upper upscale, but then after for super luxury, we do not.
So
just to tell you also something regarding the lease issue and the third-party operators, without saying a secret, what my company has done also, especially in Germany, so far we have started that in Germany, in order to be able to create a vehicle that would lease, but that would not have to consolidate the balance sheet of the lease company. We have created, in some cases, some JV with some operators where we take a minority share. In this case, so we have a bit like mezzanine financing, if you want, but this is also another solution we explore and we are exploring in other countries.
So it's not only kind of management operator responsibilities, but it's a little bit of financial structuring as well, to keep your hand in it. Now, so basically no franchising of luxury from Accor and Marriott. And how about Hyatt?
The same, exactly the same.
All right.
Yeah.
And just to understand it, how is the franchising business different? How have you guys had to redeploy, or have you, in terms of support?
Well, I think I'm happy to jump in. I think as we have seen that the franchising model is growing and growing every day more, we just have dedicated teams to the franchise world, right? We have a dedicated franchise support team, pre-openings team. So it's everything dedicated to the franchise model, right? Which is, I think it's helping all the owners in all EMEA, in our case, which is EMEA, the region. And it helps to give support to all of these franchisees, which every day there are more and more, yeah. So we are putting an infrastructure only dedicated to franchise.
Anyone? Before we move on to the next subject, anyone else want to?
No, we're similar. We have an infrastructure. yeah, we have an infrastructure in place that looks after our franchise partners and owners. I think the one difference with Hyatt is because we're still relatively small. We've got just over 70 hotels in Europe. We treat all our type of hotel owners exactly the same way. So managed, owned, or franchise properties, they benefit from exactly the same infrastructure, the same people, and the same support as the other type of hotels.
Thank you. Did anyone have any last words before we move on to our next bucket of discussion? I had a quick question here, Jerome. In terms of these joint venture structures, what is the primary goal that you have? I mean, is it driven? How much of it is driven financially, and how much of it is driven in a way to so capture some value, but as a matter of control?
The combination. I mean, anyway, very often when you work with a white label operator, those companies, they are not really capitalized. So very often you need to put some skin in the game with this type of guys. So you've got many different solutions. We have some investment we do to support the operator. The solution is to say, okay, let's set up a company together. So you've got a partner, which is not a financial partner, it's an industrial partner. So we are working in the same business. So we would not ask like a private equity to get the global digital.
Thanks. I'm going to kind of move on.
Party owners. Yeah.
That you broke up there, Jerome.
Okay, sorry.
All right. Well, anything there? We'll recap for the audience at the end on that particular issue. And we'll send it out to everyone to make sure that it's all understood. Now, coming to COVID, right? Here we are, presumably coming out of the other end. There's still quite a bit of uncertainty, but it's nowhere near the uncertainty that was last March, right? And I'm wondering what happened to your deal flow in the Iberian Peninsula. I mean, it's March. I mean, what kind of conversations were you having last year with people that you were close to signing deals with, or you had just signed deals with? I mean, what was going on? Without going into kind of confidence.
Well, I think last year, I mean, I'm most probably talking for myself, for the rest, but I think at the end of the day, what we faced in general was a lot of deals that were moving very fast, that we were thinking that we were, that the owner was very decided, maybe they slow down a little bit, right? But it's true that this beginning of the year is becoming very strong. I think there was a lot of appetite to keep moving forward things and to keep signing, right? So I think there is, beginning of this year and end of this year is, I believe, I like to be positive, and I think there is appetite to do more and more, right? So last year it slowed down because of the COVID. I think nobody knew where we were going, but I think now we start to see a little bit more the light at the end of the tunnel. Even we know it's not there yet, but I remain positive. Yeah.
I think it's the same it's very similar for us. The deals that were advanced enough back in 2020, where they had planning, they had financing, all the parties were aligned. These are all deals that have progressed, maybe a bit slower due to travel restrictions and communication issues, but they have progressed, and we've been signing these deals. I think back in 2020, the big difference with previous financial crises, and COVID has been a financial crisis as well,
yes,
is that there is much more capital around. And so what we had seen in 2020 is a lot of interest by investors to deploy capital. And a lot of these investors were waiting for, the distressed hotels to hit the market so they could scoop them up. I think we have not seen that in 2020. And whilst everybody thought things were going to move faster, we now in 2021 and looking at Q3 and Q4 before really a lot of this will materialize. I think the money is still there. Those deals are still going to come, but a lot of these opportunities that we were looking at, they were on a lifeline with government support, with banks not taking back assets, and until that support stops, we're not going to see a lot of these deals on the market.
So it's a similar situation in Europe then, where banks had more leeway from the regulators to essentially manage their loan portfolio, whether it was some forbearance, some pay down of principal in exchange for extension of time, etc. But it didn't seem like a lot of lenders wanted to move on their assets because they'd have to own them in a way. Jerome, were you facing similar challenges on the financing side?
Yes, we've been, like my colleagues, we've been very active in 2019, and we have signed quite a lot of deals because we came back to the level of 2017, 2020, and 2019. But we have some projects which are stuck now because they were realized, but some of the projects now have faced some problems of financing, and also the market is a bit less active on the sale and leaseback scheme. So that's why we are facing this type of problem. But I think that things are recovering, and we are quite confident in the future. But there is a lack of there is a problem of financing. Not so much that the banks don't have money, but they are asking some different amounts of leverage, and this is an issue for some private equity, some investors.
And it appears, I mean, from what I understand, the lenders are there is money. There's a lot of money that's already in assets right now, and I think everybody's looking at this as an aberration of 18 months or 2 years where there was an actual pandemic with shutdowns and then the growth that comes afterwards. How do you guys compare this versus 2008, the great crash of 2008? I mean, are there any structural issues in the hotel business that would concern you about going forward? Or is this just kind of a crazy time? Nobody expected it, but we're coming out of it and it's business as usual.
I think the big difference to mentioned earlier is there's much more money around than in the big financial crisis back from 2007. But I think there are some fundamental differences as well in terms of how governments and banks have been supporting a lot of industry compared to last time. Are we out of this yet? Slowly. I would say there is still a demand that needs to come back. I think the big risk to owners for the moment is the time when government and bank support will disappear. It may not necessarily mean at the time that demand will be back or so quickly. And a lot of these hotels will defer rents, they will have deferred loans to repay, and they will be hit with that without necessarily have a revenue that's back into the properties. So I think that is a bit of a risk. Otherwise, the money is there. So when assets will hit the market, I think we will see quite a bit of movement.
We just had a question regarding mezzanine financing. Are you guys at the level where you're seeing that in some of your deals as a stopgap if you're not able to finish the structure with traditional financing? All right, so we're going to save that for our next webinar with the lenders and some mezzanine investors. And in terms of when Nuno, when you were talking about 2008 and today, in terms of the recovery, right? Summertime last year, a lot of resorts did well. I mean, it was amazing. There were crazy rates being paid for short getaways. And is this sustainable? Drive markets, very close by markets, staycations, those were all very popular. Do you guys see that as a continuing trend as an add-on? Because typically resorts would always be kind of regional escapes, fly to markets.
Yeah, well,
Yeah, sorry, go for it.
No, I was about to say that I think what we are seeing right now is that there is a pent-up demand, which is really ready to start traveling all around Europe, all around the world, right? So what we are seeing is as soon as there is a corridor, as soon as they open flights to some places, we see an extraordinary movement in occupancies, right? Which is great. I mean, it's true that as soon as all the vaccines, as soon as there are more corridors that we can start travel and be more flexible, we see there's a lot of demand on the leisure point of view. And I think back to your question in 2008, right? I think this is on the operations point of view. I think this is one of the big difference from that time, right? I think here now everybody's expecting to start traveling in the leisure point of view. And we see that in the systems, right? We've seen that in the Canary Islands when in October last year, they start to do corridors with the UK and this kind of stuff, right? So yeah, I think this is a little bit of difference from that time as well.
Jerome?
2008, I mean, this time I was working just in Italy, but I remember nobody wanted to do hotels anymore. It was really completely a depressed market. So it was not, yeah, because the hotel were not working. Now, looking in the past, maybe the hotel were doing 20% less than what we used to do. So now we would be very happy to do 20% RevPAR less, and now we are at 20%. So, but no, it was really different. Nothing to. We are just waiting for the end, and as soon as they can travel, they do. I've got some resort here in Italy that they are full for July and August.
No.
Yes, very, very similar. Very similar to us.
Well, we'll add a really quick question since we're talking a little bit about recovery from the other section. How about, so leisure we talked about. How about the corporate business segment and also MICE, meeting segment? What are you guys seeing in the trends? How much of the lag is there? Nuno.
I think it depends on which part of the world you're in. But in Europe, national corporate business will continue much faster than corporate travel. That's from an international point of view. That will take a little bit longer. We are seeing an interesting trend, and I'm sure it's the same with my colleagues in relation to MICE business, where a lot of the organizers and also for bigger events are starting to engage or have started to engage with our hotels and really planning entire events, multi-day events in terms of programming of those events, with the one empty little box being the arrival and the departure date. So there is a demand by event organizers, by companies to start hosting these type of kind of MICE meetings again. But to Edgar's point, until travel corridors open and there's a bit more certainty as to kind of how travel will look like, say, coming out of the summer, I don't think we'll get these dates pinned down. We think end of 23, 24 is kind of when we should hopefully be back to kind of pre-COVID trading levels. Touch wood, assuming kind of we're on the way out for the moment.
Yeah, Jerome, what do you think? 2023, 24?
Regarding the MICE in my company, it's a bit different because maybe there is a bit more, well, not more pessimistic, but we think that the market and the way people do MICE or consume MICE will be a bit different. So it's not so much that we don't think that the market will not recover, but we are anticipating some change in the habits on what people will want to do. So we are trying to work on new solutions in order to adapt to the evolution of the demand. Because we certainly tomorrow we won't work exactly the same way we used to work. We used to work remote online. So we anticipate some changes.
Edgar?
Yeah, I mean, very similar to Nuno, right? I mean, we see the leisure market is going to grow very fast. I mean, as due to the demand that is behind that, and we see as soon as we there's corridors, etc. And on the other side, for the MICE, it's going to take a little bit more of time, but because I think the approach is a little bit different, but it's going to come back. We believe it's going to come back, the MICE segment. Yeah.
Jerome, you mentioned something that was intriguing, is like a change in behavior of a key market segment, MICE, right? Are you, as a group, seeing any other fundamental changes in travel patterns, different customers, different behaviors, aside from the MICE segment, Jerome?
This is something we have a bit anticipated. We have done a lot of efforts, and we have been investing a lot of money in our lifestyle division, in lifestyle brand, with the takeover of SB, with the joint venture with Hoxton, with other brands that we have like Mama Shelter, 24 Hours. So we really believe also that the way you consume a hotel is going to be a bit different also. That's why we want to attract in our hotels people from the city, not only travelers. So for us, a hotel, especially in the lifestyle hotel, it's a hotel that should not do more than 60% of its turnover with the rooms, and 40% of the turnover should be with other activities like co-working, like F&B. But the most important is that we want this 40% has to be done with 70% of local customers. So the hotel has to become a hub, not only a place where you sleep. So, and today, if we take our lifestyle division, it's already globally 25% of our pipeline in the future.
Well, that's interesting. So a very much local community interaction that happens, and that's why people want to come and visit in terms of concept. Nuno and Edgar?
Yeah, very similar. So lifestyle hotels are certainly on the up also with us. I think the one thing that we've also seen is people are looking for much more experiential hotel stays, not necessarily the cookie cutter, all hotels are the same experience. So our collection brands have grown significantly, across upper upscale and luxury. These are a lot of the hotels that we've been opening and signing, and Seven Pines is a perfect example. Is a destination, one of our collection resort brands. So that's something we've been seeing as well.
Yeah, the collection brands are quite interesting all the way around. Edgar, are you seeing increased interest in Marriott's collections?
I think when you looked at the market and where are we going and what's the situation, right? I think it's very clear that the growth, it's going to be a lot of in the conversion opportunities, and looking at what's the market, what's Europe, I would say more Europe than maybe other region. It's full of independent hotels. What they need is some power, some systems that brings reservations and this kind of stuff, right? So basically, yes, we do believe that the collection brands are going to be really important. We have luxury collection, we have outdoor collection, 3-bit portfolio, 3 of the collection brands that can fit in a lot of kind of independent hotels. And yeah, we are seeing so much appetite in the market, right? That a lot of even maybe in the past we wouldn't see, as we were saying about the franchising model. Right now we see a lot of even family-owned hotels with 2-3 hotels. They want to think and they want to brand it with one of these collection brands, maybe starting with 1 instead of 2, and see how it works, right? And we've seen this for example, in Lisbon with the Iberan's hotel that we have signed as outdoor collection opening this year. So yeah, there are so many appetite for this collection brand, absolutely, yeah, and every day more and more.
Well, that's interesting, because that's another thing about the Iberian Peninsula, along with Europe as a whole, is the strong tradition of independent hoteliery, right? Who need a little bit of a boost, but want to keep and retain their own identities. And in terms of collection, Accor, Jerome, what is Accor doing from that perspective?
It's same for us. I won't be so original, but we believe that the collection brand growing market for all the reasons that Edgar and Nuno explained. So far we've got two collection brands, one in the luxury segment, which is Emblems, that we just launched 6 months ago. We've got M Gallery collection, which is an upper upscale brand, and we are going to launch also by September a new collection brand on the upscale positioning. So it's a very important segment for us, and we want to grow on this segment.
Now we've talked about collection brands, franchising, and really in the Iberian Peninsula. Where does this lead to in terms of opportunities for you? In terms of we've gotten a lot of questions as give us some kind of idea as to what hot destinations there are from the resort perspective, but also from the urban and other areas. Edgar?
Well, I think as I was saying before, conversion opportunities are going to be the trend in the next couple of years, as we can see. This is why we are pushing, or in general, we would push for these collection brands. We also have other brands that we are trying to be as much flexible as possible when it's trying to conversion, like 4 Points by Sheraton and brands like this, because this is where we see. I mean, I think in greenfield point of view, it's going to be a little more difficult. There are very few opportunities, but in the conversion point, it's going to be much more interesting in that sense. Yeah.
Nuno?
Yeah, very similar. So we're much smaller. We have a smaller presence in Iberia. I think we've kind of gotten into the big cities now: Madrid, Barcelona, Lisbon. So for us, growth is twofold. One, it's kind of getting into kind of secondary and provincial cities in both of these countries. So Porto, in Portugal, the Sevilles, the Marbellas, the San Sebastians, the Valencias, the Granadas in Spain.
Right.
So because we have no presence there yet, we see this happening with conversion brands, but also with our upscale and upper upscale brands, Hyatt Centric, Hyatt Place. And then to Edgar's point, it's the growth of our conversion brands, hotels that want to tap into that distribution of a global player. Any of those three players here present today, but want to retain some of their identity. And I think the challenge for hoteliers will be to adapt to the situation that we're in now with COVID. So we have certainly been more flexible with our commercial terms. We know when it comes to conversions, and that has often been the fear from a lot of those private owners that look to enter with a hotel group. There's been this fear that they have to go through very expensive property improvement plans. And yes, certain hotels will need some improvements to kind of meet brand standards. But that improvement doesn't need to necessarily happen straight away now. So we are talking to hotel owners and tell them, look, we know, you're strained in terms of cash and disposable income. So let's bring you on board as an affiliate. You get our distribution, subject to being compliant with law and fire life safety, but we can work on an improvement plan that you will implement over a certain amount of time. So when COVID has passed and you build up your cash flow in your hotel, at that moment in time, you can implement a bit. And you then join, whichever brand that was that Hyatt had negotiated with you. So we are seeing a lot of flexibility on that front as well, to be able to grow.
Now, so there were, in addition to kind of these conversions that you mentioned, Nuno and Edgar, Jerome, it sounds like new build opportunities are you guys are not seeing a lot of that. Is that accurate assessment right now?
What do you mean? I didn't get you. That we don't see so much opportunities.
New construction.
Yes, you've got some new construction, some greenfield, but it's true that recently the market is more on conversion of existing hotel, or maybe also to take over hotels done in the old way and to try to find the upside and reposition the hotel with the brand with major capex. So So it's really very much a market where you consolidate what is existing and you transform what you've got. But still in some countries, but sometimes it's very difficult in some countries to do greenfield because it takes a lot of time. So it depends on the profile of the investor also. Some investors, they don't want to be exposed for 3 years, 4 years. So they just want to have something which is already running. They close it, do the capex and reopen, and it just take 1 year, but they don't have any issues with license and these type of things. But another thing that I wanted to say, maybe it's, we, with my colleagues from Hyatt and Marriott, it's pretty funny because we are working B2B2C. So the first client we have, it's investors. So investors, we have to propose some solutions, of course, that will be able to bring some consumer inside the hotel. But then each investor, like for any product, we have to propose solution. And then after, the investor will have his perception of what is the best solution. So the market is rational, but sometimes it's not so rational. So that's why we also try to, like Accor, we try to have more brands. Now we've got 42 brands because we want to be able to propose many different solutions to our owners and investors, but having a platform, which is the platform for distribution and loyalty, which is the backbone of the company.
So many different faces and personalities, but all kind of united by one major distribution and other operational backbone. I would say that Marriott and Hyatt have the same thing. I mean, and it's interesting how, how do you guys, what is the differentiating factor that you see in terms of the approach that you take in the Iberian Peninsula, Edgar?
Well, I mean, basically, our approach is pretty similar to what they were saying, right? I think we try to be as much flexible as possible with this kind of conversion brands. We have a lot of, we have a lot of presence in Spain and in the Iberian Peninsula in general, even in Spain and Portugal, with more than almost 100 hotels already. This puts us in a situation where we can go to secondary or tertiary cities with this kind of collection brands and a franchise contract operated by a family, which could make a lot of sense, right? And very similar to the same approach, right? We pick the hotel, we go through flexible conversion, try to be as much flexible as possible with the commercial terms due to the current situation, actually. So yeah, similar approach.
Nuno, any perspective from you?
I think we're slightly different. We have 19 brands, so a bit less, 12 of which are available in Europe. So it's a much smaller book. I think for us, what's important is that our brands are really clearly differentiated. So there's only a few brands in certain segments that we play in, few in the upper upscale, few in the in the luxury, very distinct. So you're in the regions, you're in a region, you're in a place, you're in a place. I think that helps us, and it's something that we know our kind of customers like, but also our owners like. And we also operate only at the upper end of the market, which is very different to Accor and Marriott, who have more brands that can play in different segments where we just can't play. We don't have mid-market brands. We don't have economy brands. We just don't play in those markets, and we can't go into those cities where maybe you have a rate ceiling and where those brands actually have an opportunity to grow. But it's a choice by Hyatt to keep playing at that upper end of the market. It's the type of customers we have in our kind of World of Hyatt program as well. So, and I think that's the slight difference between Hyatt and kind of Marriott and Accor.
Thank you. I mean, we've talked about the types of projects and the approach with branding. How about just let's take branded residences as part of your resort offer. We've heard from many different sources about the increased interest in getaways during these last 15 months. People highly interested in buying second homes, third homes, etc. are you seeing any kind of special interest, or are you devoting any kind of resources to that segment?
Yeah, exactly. I think yeah, it's becoming very popular every day, more and more. We have a dedicated team only for branded residences, which is good. We are looking into all EMEA, right? And I think it's becoming a trend as well. And we believe it has so much potential in the region. So yeah, I mean, to your question, absolutely. Yeah.
What about, I mean, typically we think about branded residence and resort, at least lately. What about kind of city branded residence? Is that still of interest?
Yeah, absolutely. Yeah. We do. I mean, I speak from our point of view. We do from standalone branded resi urban to a resort, hotel plus branded resi. We can explore all the opportunities.
Jerome?
Same for us. Many very developed in the United States, also much more in Asia, Southeast Asia, or Middle East. So it's starting. In Spain, particularly, you've got some opportunities a bit more linked to the resort segment, because you've got a mix normally of sales and art, also a way to finance part of your investment, because you can do the cash out of the residential part. But it's a trend. Yes, it's coming up. It's a bit complex sometimes to build this type of operation, but it's coming up.
The project in Soto Grande, I mean, what was like one of the key things that you thought you had to do to kind of make that successful from the residential perspective?
Soto Grande, I mean, the investor that took over Soto Grande mainly for the residential part. The main objective of the investor was to change completely the hotel that used to be a 4-star hotel, because they want this hotel to be a hub for the Soto Grande real estate. So it has to be also a support for the development of the residential part, because they still have a huge amount of residential to build and to sell. We will add certainly a part of branded villas with the Soul brand, but it's really to create a support, to have a luxury hotel that will support the whole development, the whole future development of Soto Grande. That's why we have also in this hotel, we've got the biggest spa in, I don't know if it's in Spain or southern Spain, of 2,500 square meters, because It's going to be a hub for all the people living in this area.
And thank you. And Nuno, the Seven Pines, part of Destination by Hyatt. Destination by Hyatt has really strong residential roots, resort residential. How is Hyatt looking at kind of rolling that out in Iberian Peninsula and the rest of Europe?
Very similar to Jerome and Edgar. Certainly at resorts destinations where residential underpins the investment of the developer, but also in city center locations. We have a number of branded projects under construction for the moment. So yeah.
Okay, now we actually talked a lot about deal structures. I don't think there are any other additional questions from that, and we're getting to the end of our time. But perhaps you can talk a little bit about what are the top 3 questions? I mean, it doesn't have to be all 3 that you face when owners, when you talk to them about management contracts or franchises. I mean, what is their top of mind concern? Jerome?
One top of mind concern would be the brand delivery. So what can you deliver with your brand in terms of sales and loyalty? Then after they want to get, this is a bit special because very often they want new brands, but then after they complain that new brands don't have a strong network. So it's a bit difficult to explain that if I start with a new brand, of course I don't have so many hotels, but they want something new. So that's why we are very performing in the lifestyle segment. And then I would say they certainly have some financial concern about the deal structure.
Edgar?
The most important, at the beginning, the brand, perception of the brand and what we can deliver.
Yeah, I mean, I think the first question that Jerome said is the first one. No, it's the system delivery. What happened if not? What happened if yes? What happened? What happened? No? So that's the main question that we got. No, system delivery. So we need to prove them how we can deliver. I mean, it's more question related maybe to franchise rather than management, because with management we work in another way. But yeah, it's similar questions. The system delivery is the first question. Then when we talk about franchise contracts, is more about is this really a franchise contract with no termination rights, with this kind of stuff, right? That we all know, and we need to go into details and explain how the franchise world works. It's true that every day everybody is more familiarized with the franchise world because it's much more popular and less explanations are required. And yeah, and I would say more questions about the Bomboy systems, how it works, how it doesn't work, and the fourth point I would say is the conversion process, how it goes, cost, no cost, investments of converting those hotels when it's a conversion, how much would it cost to convert it, right? And timings.
Thank you. Nuno?
Very similar. So a lot on distribution and delivery. And I would say as well on alignment of interest. This is something that owners also are looking for nowadays, not just the brand, taking all the money, but really aligning certainly in management contracts, your bottom line with your fees and the returns to the owner. So that's something that we're seeing as well.
Well, the one thing I can tell you, it really hasn't changed. That brand delivery thing is amazing. It's a good question to have. Now, we're getting to the end, but I mean, just in terms of your deal flow right now, from my discussions, I think all the brand operators are very busy. It's as if what I've told my guys is, you do your homework in the last, when you can't go out and meet with people, see sites and all that, you do your homework and then you go. And we still are doing deals on Zoom, right? It's so different. How is this gonna just go away, or has your business practice been modified, or will it modify going forward? Nuno?
I don't think it's going to go away completely. I think, we still very much have a business, which is a people's business. So we need to get back traveling, seeing our network, going into the various countries, meet with people, because that's how you get the opportunities, not through a Zoom call.
Right.
But I think people have probably changed a little bit the way about how business gets done. Before COVID, and I'm sure it's the same with my colleagues, you'd get on a plane for one meeting and fly back. I think people have had a bit more exposure of blending, personal and business life, being stuck at home. And I think people will carry on a little bit more intelligently in how they travel, and how they keep some kind of work-life balance. And certainly the people that I'm talking to that have families, that's exactly how they are planning to come out of this.
Yeah. No, I was about to say, I'm sure. So the three of us, or even more developers from other entities or companies, I'm sure with this pandemic they've signed deals online, right? Which we would never expected, because our job needs at least to visit the hotel, see exactly, because sometimes you might mistake or someone might mistake, right? But yes, it has been what it has been. We couldn't travel, nobody could do anything, so everybody has tried to be working online with all the global design team, with the brand team, with everybody involved, so everybody was going on the right direction. So I think this pandemic has touched us a lot, right? So we did it in the past, but I think as Nuno was saying, is our business is more on a phase by phase and meeting and visiting the hotels, right? So I think it's going to come back, but maybe as Nuno was saying, if it's a meeting, maybe you don't need to go, right? Maybe you can do it, but I hope we come back soon to travel. Yeah.
Jerome? You're on mute. Yeah.
I just believe we are going to increase our productivity. So I remember I was a soccer fan when I was 10 years old, and at this time you had no soccer game on TV because people would say that if they put the game on TV, nobody else will go to the stadium. So it was going to be a loss of money because people won't go to the stadium. And at the end, when you open so different channels, and then after you can see soccer on TV, this is where you see you can increase. So it's a bit the same. You will have some meeting that before we were doing physically, that it's no sense to do physically, and some other meetings that you have to do physically, and this one you won't be able to change them. So it's like when you increase the production in whatever business, we've got new tools and we are going to produce even more.
Well, I'm very glad to hear the three of you talk about wanting to get out there again, because that is critical to our business, right? That's the reason people want to travel, to go see other places. So I'm glad to know that push button development is still an impossibility, because I think that completely avoids the human connection that really drives great projects. So on that note, we're going to close at this point. Last words from anybody at Edgar, Nuno, or Jerome? No? Okay, very good.
I just want to say thank you to the Arun Group, to Jesus and Elodie, because they invited us for this panel. It was very interesting. So thank you to Arun Group.
And thank you to the three of you. We had a very good discussion for being very open and direct. Thank you very much, and thank you to all of the viewers and listeners. I go back to you, Jesus. Thank you for sponsoring this.
Thank you very much. We hope you have enjoyed and learned as much as we did from this session, from the hand of these magnificent hotel development experts. And we take the opportunity to remind you that you can rewatch the recording of this webinar through the Arun Group website, where you will also find out about upcoming webinars. You will also receive an email asking you about how you found the session and what would be your suggestions in terms of topics and speakers for next editions. This is very valuable for us. We want to improve every day in everything we do. And muchas gracias y felices vacaciones en nombre de todo el equipo de Arun Group. Gracias a todos. Hasta pronto.
Sí, muchas gracias. Chao.
Bye.